Good
This
afternoon.
conference will now be recorded.
Good afternoon, and welcome to the webinar, Cost Report Concepts, Analyzing the Results. I'm David Kennedy, the Program Coordinator for today's educational meeting. Thank you for joining us. Before I kick this off, I'd like to remind everyone to visit our chapter website, www.hvma.org/chapters/region-1/Northern New England. And I'll paste that in the chat as well. We have a lot of great content on our website. You can find our education calendar there, as well as our chapter newsletters. So lots of really good information. Please make sure to visit that site. If you've not been receiving emails regarding chapter events or newsletters, please check your spam filter for missing correspondence. This webinar is the fourth in a four-part series focused on cost reports. The Northern New England chapter is planning to have a reimbursement and cost report focused in-person education event in the fall of 2022. So be on the lookout for that, and please be prepared to mark that on your calendar. The handouts for our session were made available to you for downloading yesterday, and we will have you on mute, and we ask that you use the chat box to post any questions for the speakers. I'll help facilitate those questions during the presentations. So let's get started. Today's discussion will focus on the value embedded in underlying cost report data and the benefits of analysis and benchmarking. Our speakers will cover a broad range of approaches for utilizing cost report data and how that information informs the overall operations of an organization. The format of our meeting includes 4 15 to 20-minute presentations by different individuals who will share different approaches and techniques for cost report analysis. Then we will have a 30-minute panel discussion. To start the program off, we have Becky Dolan. Becky is a software developer with 33 years of experience with Medicare cost reporting. She has direct experience with the automation and flow of data to the cost report and the complete process of accepting and auditing cost reports. In her role at HFS, she has conducted training for most of the Medicare administrative contracts, several HFMA provider groups, provider chain organizations, and individual providers. Insight in business practices has resulted in further automation of the HFS software and resulted in significant time and money savings for clients. She's the current president of HFS. HFS has become the leader in Medicare cost reporting in the software industry and is utilized by the MAC and other provider markets. So with that said, Becky, I'll turn it over to you.
Thank you, David, and thank you to the group for inviting us to present. I'm going to share my screen. Okay, so I'm hoping that looks bigger on your screen than mine. Does it look okay, guys? All right,
yes, it does.
I'll assume it is. Okay. All right, so my plan is to go through, different, let's see here, the different aspects of the HFS software that could help you with looking at your data in lots of different ways. So I have 15 minutes to go through. These are the ideas that I came up with for this presentation. I'm going to go through Icarus, management reports, data extractor, API Excel, special reports, and auditor. And the Icarus section is the one section where you may or may not have this HFS tool. It is considered a separate product than your Medicare cost report software. So I think most of you use the HFS Medicare cost report software. And so everything beyond Icarus you have at your, on your desktop software, and we'll go through how it could work for you. So let's start with Icarus. And the Icarus database is probably over 1 million reports now. So we get the data from CMS quarterly. That's the public use files. You guys could get them too. The problem with the public use files is that they're huge. So it's really hard the hospital public use file is too big for you to probably deal with in Excel. So you have to come up with some database, and that's what we've done. Is we've come up with a really large and efficient database that people can subscribe to and have access to the country's data. So I list a lot of different provider types there, and we only sell the hospital data. But if you ever need data on SNFs, RHCs, any of these other provider types, and actually we just added OPO the other day. So about 2 quarters ago, we added the OPO software, or the OPO reports. So if you ever have a need for any of these, let us know, and we'll just open that up for you. There's no fee. So anyway, you can check that out. So when we first started this, we found that there were some missing reports. We've definitely, been able to clean up the database a little bit with provider help, telling people what's missing and what's, so then we would contact the MAC or CMS to find out what happened to the data. We're feeling better about the data. We haven't had any requests like that in a while. It's definitely not as common anymore. What we do with that data is we keep it in the database, the different elements, and you can do lots of things with it. We're going to go through some of those. But one of the things we do is, because we're very familiar with the data, we reinvent the MCRX file. So we create HFS data files. So you can actually download one of those and look at it. So we have the different functions available. This slide tells you about the naming conventions that we use. They're kind of long, but they mean a lot. So we can tell where you got this data from and what it means by the name. One of the features in the Icarus database is you can have a provider group, and you can have lots of provider groups. So if I'm a consultant and I'm doing work in New England, let's say, but I want to look at the Boston hospitals, I could do that. I could make a list or a group of Boston hospitals. I can add the hospitals individually or upload a list, and it'll keep that, and it'll know that I'm interested in those facilities. And we'll email you whenever the quarterly data comes out, and we'll tell you that there's been an update to any of those hospitals. So we keep you informed about those hospitals. You can also use them to extract data and hone in on what you're interested in. And then we have our canned reports, lots of different canned reports. We have a list of them out there, and you can compare 4 years or four different reports, I should say. So the default is 4 years with the most recent provider or status. But you could also compare, one facility with 4 different statuses for the same year if that was available. So you get to pick what's on those columns. This screen shows you our CBSA lookup. So in this situation, you can put in a CBSA, and we will compare and give you the information for the hospitals included in that CBSA, and then you can pick different reports to run from that. This is a roll-up report. So this allows you to take your facility or a facility and then compare it to a group of other facilities, and you define the group. So it could be that you want to, maybe it's that Boston example again. Maybe you want to compare a hospital in Boston to all of the other hospitals in Boston. Or maybe it's a CAH hospital and you want to compare that to all of the CAHs in Pennsylvania, something like that. You could do that. So this is a good way to do comparisons to other facilities and get averages. And all of that data can be exported to Excel, so you can check it out and see, what are we looking at? How did we do our math? These are the available facilities. I told you we can recreate the HFS data file. You can also get a PDF of that file. And also it's really helpful to see just what data has gone into Icarus for each facility. So you get a page for each facility that you looked up here, and then you can see what reports are in there. Here's a list of the snapshot reports. And then this shows you how you can use that provider list to, so you don't have to go searching. You can just have your list there and conveniently pick from the hospitals that you're concerned about. And then kind of the big power feature of Icarus is the advanced search and extract, where I can break down what I want to look for and then extract whatever data I want into lots of different file formats. So here's our normal filters. You can choose any of these, and if you can't read them, if they're tiny on the screen, I can look at my provider set again. If I don't have anything in the my provider set, then it's going to look at the whole universe of hospitals. I select the report type. I can choose fiscal year end, city, type of hospital, all sorts of things. And then we show you the results of that, and you can choose to extract from all of those facilities or just some of them. And then you get to pick what you want to extract, and there's really no limits to this. You can pick a snapshot report that you like, a worksheet data set, so I could say I want to see the S's for all of those reports that you found, or I can customize exactly what I want. So anyway, this just goes through that. We have lots of different ways you can get to that data, and it's quick usually. And we're about to release a new quarter. If you guys subscribe to it, it should be coming out as soon as we hopefully test it today. We'll get that out to you. And then we also have a provider map where you can click on different providers and see information about them. Okay, and we've actually redone the site. It's still in testing, but we hope to release it soon. All right, so now on to the management reports. And from here on out, everything I'm going to talk about is included in your desktop software. So you have these tools. If you ever want to know more information about them, then you can email me, and I will send you to a webinar, or we can set up a time with a support person where you can go through this feature, and even tell us what your project is, and we'll help you. So the management reports are a series of reports under tools that compare two MCRX files of the same file type. So here, if you put in, typically we're looking at a prior year file. It could be your adjusted cost report or a different facility. It's up to you. You select two file types. We do some fancy things in here where we are looking to see if the date ranges make sense, and we'll adjust if they don't. We check and make sure that the cost centers are in line, and if they aren't, we give the opportunity to you to work on those. And then we have over 100 management reports, and it's even growing. I wrote one up yesterday to add. And so you can just pick, and you literally just click and drag the reports that you want to run. If you're going to be redoing or doing the same bunch of reports over and over, you can save it as a group and do it again. You can set tolerance criteria, so you're only seeing the differences that you're interested in. That's what the flag shows there. These come out as forms that you can copy and paste from if you want. Okay, so, I did add in, a couple of my favorites. So cost report analysis is report number 3. If you've never run that, that might be of interest. It's a single year report, but it breaks it down. Actually, that's showing 2 years, so I'm wrong about that. But it breaks it down to everything that happened to a particular cost center. Kind of interesting. There's another kind of new one, reimbursement versus cost analysis. So definitely check those out. And I'm just going to keep going here. You guys can check it out later if you want more information. The data extractor, we have it so that it'll extract data from one report or a whole bunch of reports, and that's the batch one. And it's very easy. It's, but again, we can show you some tips and tricks to kind of hurry up your data extracts, setting them up. Like here, we're using wildcards, the 999.99, which would mean we're going to extract all the lines and all the columns. So it's a quick way to get to that data. We also have a couple of kind of stock CSDX, that's the specs, where we'll go for all, and we can share that with you too. So let us know if you want to extract data from one cost report or the next. And I would say the difference between like this and Icarus is that this is going to be your live data. Icarus is going to be the public use data. And that CSCX can be used in Icarus, just so you know, and vice versa. So the data extractor, it's going to show you the batch. And we have criteria in the desktop software also that'll help you get to kind of the scope of the reports you want to look at if you're looking at a lot. API Excel. So this is a tool that allows you to get data from a cost report or into a cost report or create audit adjustments. So, and this deals with one cost report if we're putting data in, and then up to 4 if you're taking data out. And of course, it's an Excel spreadsheet, and we just have this code behind it that tells it how to work with our data file. So you would start with this. It's available free on our website, and then you can, put in your, if you have a report that you're trying to grab data from the cost report and you're currently keying it, check this out, okay? And then also we have people who are doing their work papers in Excel and want to push their data, so you can do that too. All right, let's get there. And then also I wanted to mention we have these special reports. These are available to extract. These are available to view in the current cost report. They're usually suggested from some kind of change request from CMS. So anyway, definitely look at this. And then Auditor was going to be one of those. Okay, so the Auditor function is, and that is the last thing I'm going to go over. So I know I'm a few minutes late here, but if you can get a .auditor file from your Mac, here's the kind of the instructions on, marrying that up to your current data file and then applying it so that you can see those adjustments. And then you can go and you can look at the impact of those adjustments. We have an impact report that shows the settlement differences between as submitted and those adjusted. So anyway, if you're not currently using the Auditor, it's a great way to keep your as submitted copy of the report untouched, just as it is, and you can put in all of your changes. Auditor will affect any cell in the cost report, and then see the result without ever changing that and giving you a perfect trail. So great for what ifs, also great for looking over your adjustments from the Mac. Don't forget to ask them for the .auditor file. It'll save you some data entry. And if I've piqued your interest on any of this, but you need more, just contact HFS, and we will get you more information on what you're interested in, how the software can help you. Thank you for your time today.
Thanks, Becky. A reminder to the group: if you do have any questions, feel free to put that information within the chat box, and we'll make sure to facilitate those responses. Our next speaker is Deb Durane. Deb is a senior manager in Barry Dunn's healthcare practice, specializing in healthcare reimbursement consulting. She has over 20 years experience in the healthcare industry and has been a leader of revenue cycle operations, budgeting, and financial planning, including cost accounting, reimbursement, and managed care contracting. Her experience as CFO of Northern New England's Critical Access Hospital provides her with an understanding of many challenges rural hospitals face, and along with that, a passion for optimizing reimbursement and improving operations. She enjoys using the preparation and analysis of possible cost reports to provide insight into hospital operations, potential areas for efficiency, and additional reimbursement opportunities. Deb, thanks for joining us today. Happy to have you presenting.
Great, thank you for that introduction, David. I appreciate that. Give me a moment here to share my screen and make sure this is working and everyone can see it. How's that? Are we good?
Looks good.
All right. Excellent. We'll get going. Well, thank you. Again, I'm happy to be here to talk about how we can use Medicare cost report data to do benchmarking at hospitals. We've all recently filed our cost reports, and now what, right? What can we do with that information? There's a wide range of financial and statistical information in those reports, and as Becky has illustrated, it's all public information that we have the ability to access and extract and update quarterly. That cost report data can be used to benchmark your financial performance. So that's what I'm hoping to give you guys some ideas about today in my 15-minute blurb here. I'll cover a lot of ideas and toss a lot of interest out there. And hopefully you guys can grab hold and find ways that you can leverage all this rich information in cost reports in order to do some benchmarking, in addition to a wide variety of other benefits that having access to that information can give you. So we extract cost report data from Icarus. So we create a database of our own, actually, to help facilitate the process of accumulating all of that up. And we compute a variety of ratios off of the measures and data that we can get out of the cost reports, and we trend that over a period of time. Anyone can do this. It's all public information. You can do it yourselves. We like to slice and dice that data, kind of add some filters in there so that we can more appropriately select the right peer group associated with whatever analysis it is that we're looking to do or that our clients are looking to do. You can cut the data by state, by a greater region, the type of facility, your Medicare designation, of course, would be one, bed size, or as Becky illustrated in her presentation, you can specify particular peers that you'd like to compare yourself to in your benchmarking analysis. Some of the data that's available in cost reports it's incredible. It's vast. There's so much in there. Like Becky was saying, those public use files are huge. It can be a little overwhelming, if you're new to using that information. So we have pulled together some suggestions of just some key measures, big pictures that can kind of help you gain perspective of your hospital in comparison to your peers and indicate where maybe some further analysis might be warranted, where you might want to dive deeper into that rich cost reporting data in order to find out more information or compare something at a more deep level. So I'm not going to read all of these up on the slide, but these are some ideas of information you can get out of the cost report or ratios that can be computed. Average length of stay, adjusted patient days, your dish percentage compared to your peer group, ratio of cost to charge, both global, or you could go down to the cost center level and compare ratios of cost to charge. You can look at payer mix in a community. You can look at occupancy rates. There's some profitability information you can gather from cost reports as well. I have to caution you a little bit in that, not everyone completes the Worksheet G series in the most beneficial way or most consistent way for everyone to use it. Total margin is definitely in there. Operating margin is a little less reliable. You could compute a Medicare cost coverage ratio. The critical access hospitals, enjoy that. You could do Medicaid as well, if that's relevant to the state that you're in. You can look at your inpatient cost per day, routine cost per day. The sky is the limit. I'm not going to read everything on the page, but I'm going to highlight just a few, give you maybe some ideas in the next couple of slides. So some ideas for how you might leverage this information. You can analyze your cost structure compared to your peers. Are your overhead costs a lot higher than your peer group that you're selecting? Are you making comparable capital investments to your peers? How does your overall ratio of cost to charge compare? Are your costs higher or lower? Or perhaps if you're looking at additional benchmarks and it appears as though your costs are not out of whack in comparison to the peer group you've selected, perhaps your prices are too high or too low. You can use the information to analyze inpatient capacity and your utilization. For example, are you operating too close to capacity to effectively be able to manage peak census times? Are you right-sized in your inpatient service areas? How does your dish percentage compare, particularly with others with a comparable payer mix? It's the beauty of being able to slice and dice the data. You can select people in your community, or you can select people with a similar payer mix and make some conclusions or dig a little deeper to determine if your dish percentage is significantly different. Why? You know, what are you doing differently or not doing in order to capture or maximize the Medicaid eligible beneficiaries in that computation? There are some reimbursement opportunities you can certainly identify. I've only listed a couple, but there's tons. You could compare your average length of stay to other hospitals of a similar case mix. You could pull case mix index data into your database as well in order to do that comparison. As a critical access hospital, there's information in there from the provider-based physician adjustment, where you could identify your proportion of ED physician availability time that you're claiming on your cost report and see how that compares to your peers as well. You can also, of course, use the information to do research in a particular market area, you know, if you're interested in some merger and acquisition activity. So I'm only going to highlight a few examples, just since we're pretty limited on time today. But one of those examples is up on the slide here, analysis of your cost structure. This is a graph of a particular hospital's overhead percentage compared to their total cost, compared to their peer group. Hopefully that's a little bit bigger on your screen than mine. It's a little bit small. I hope you can read it. In this particular graph, the green bars are the hospital that we're analyzing. The blue bars, I've compared them. I've selected a couple of peer groups, Vermont critical access hospitals, since I live in Vermont, and Northeast critical access hospitals. You can see that the hospital that we're analyzing in the green, you know, has a lower overhead percentage than those in the Northeast in general, but in the state of Vermont itself, you know, they're kind of experiencing an opposite trend, right? Their overhead percentage is growing while the Vermont rate is declining, or it's kind of flat for the Northeast. So I think this is a hospital where a deeper dive into the components of their overhead cost compared to their peers would be warranted. Where do you differ? Is it your capital cost structure? Are you investing more in that? Or do you have significantly more expenses in plant management, plant operations? Are your employee benefit costs higher than your peers, either, you know, as a percentage of your salaries? Or is where you differ more concentrated in administrative costs? And there's, of course, a whole laundry list of additional overhead costs that are readily available in that cost report data that you could compare and dive into. Another example of a benchmark you could do is trending your occupancy rate. So this is an example of a PPS hospital that I have compared with other hospitals of similar bed size throughout New England and then throughout the United States. You can see in the blue, New England and the United States, they don't differ greatly. It appears that New England has a slightly higher occupancy rate than the rest of the country, but overall not a big difference there. But this particular provider has a significantly higher occupancy rate than this peer group. That's a good thing. That's a great thing. You know, perhaps they have more flexibility in the staffing model that they employ at that particular hospital that gives them those results. However, I see some years in there that are, you know, really pushing the 80%. That's pretty high. Would beg the question, you know, do we have additional beds that we can open up with some flexible staffing so that we can manage peak census times? Or if this particular hospital is approaching the capacity, their full capacity of the organization, they certainly would be experiencing some challenges and need to consider whether or not there are opportunity for additional beds at that facility, or how maybe some capacity at other facilities within their community or within their network, if they're a part of a network, might be better utilized. This is something that, of course, all the hospitals are struggling with, you know, being able to get availability of nursing home beds, mental health beds, things of that nature. But I thought this is an interesting graph for us to keep an eye on. Another example, how you might identify a reimbursement opportunity by benchmarking cost report data. This is an example of a critical access hospital. I am comparing their ER availability time as a percentage to other Vermont critical access hospitals and critical access hospitals in the Northeast as well. And you can see the significant difference. They are potentially leaving money on the table in terms of, you know, potentially not gathering adequate data to track their true available time of their ER physicians. So this would be a hospital that I would, encourage to evaluate the methodology that they're using to gather that data. Are they using ER log data, which is not ideal? Time studies also not ideal. It's pretty clear from the numbers that they're likely not using a technology to track this time, like the real-time location services or systems, rather. And so there's opportunity for this hospital to maybe make some investment and reap the benefit in terms of additional reimbursement. So this is just the tip of the iceberg. I didn't have a lot of time today. So hopefully I've piqued your interest a little bit in terms of giving you some ideas of what benchmarking options there are out there, what kind of data you can get out of the cost reports, and what you can do with it. If there's any questions, I'd be happy to entertain those at this time. I don't know, David, if you're monitoring the chat and could tell me if there are any questions. Or if there are any questions that are hospital specific, or maybe that you don't want to ask in such a public setting, feel free to shoot me an email, and I'd be happy to respond or get you some information that you might be looking for.
Deb, there is one question in the chat, and it is, can you tell us again how to get the information?
Yes, so we extract it out of Icarus. We create our own database so that we can just more efficiently do this for multiple hospitals. But it's something that you could do with either Icarus Access or the public use file. Like Becky was talking about earlier, that public use file can be a bit daunting. It is large, but all the information is in there if you could come up with methodologies to accumulate it well. We dump it into our own database. So we extract it out of Icarus and put it in a database, and then we have some additional scrubbing that we're doing to that data, in order to calculate certain ratios that aren't their own data element in the cost report. So we'll compute those ratios and put together a report for anyone that is interested. And I think that was you that asked the question. If you're interested in seeing what yours looks like, just shoot me an email. Happy to share it with you. It's all public information.
Okay, thanks, Deb. I don't see any other questions at this time, so appreciate the information. This is really beneficial.
You're welcome. I'll stop sharing my screen.
Okay, thank you.
There we go. Sorry about that.
No problem. Our next speaker is Dennis Houle. Dennis is a principal in Baker Newman Noyes Healthcare Advisory Practice with a focus on providing reimbursement services to hospitals, rural health clinics, federally qualified health centers, home offices, nursing homes, and home health agencies. He specializes in cost reports, third-party reimbursement reviews, operational evaluations, Medicaid DISH, financial feasibility, and regulatory appeals for both Medicare and Medicaid. Dennis, thanks for joining us today, and welcome.
Thank you, David. So once again, just to let those of you know, oops, can you guys hear me? Looks like I'm freezing. Okay, I'm trying to share my screen. I think that's making my computer spin. I'm filling in the last minute for Greg, so I'm going to be going over his slides. And just kind of caught me off guard a little bit. I was thinking Zach was ahead of me. But all great stuff by Becky and Deb, and a lot of this, what they've covered, Greg actually had some of it in his slides also. So I'm going to jump around and skip some of the slides. Using the cost report, or when you file the cost report, what's a big thing to remember is it's all public information. Anything you put on the cost report, it's going to be seen by others. It's going to be used by others for various different sources. And that's some of the things we're talking about today and showing examples of. A big item we all saw the past couple of years was the CARES Act, where, your information from the cost report was used to quickly, by CMS to quickly issue some PRF payments. So it's very important, to know that your cost report's being used for various sources. I'm going to start with page 9 of Greg's slide. I'm going to skip the Icarus database stuff. Becky did a really good job. Obviously, it's her program. She did a very good job showing it. Um, and I know one of the questions was, where do you get the data? And there's multiple sources out there. Downloading it directly from CMS is an option. Using somebody like HFS to use their tools is another option. We do a lot internally with the HFS database, and we find it's very user friendly and easy to use. In this example, in these slides, we downloaded data from the most recent cost reports for 83 hospitals in Maine, New Hampshire, and Vermont. Latest available cost reports were through June of 21. At the time, the September year ends were not available in Icarus yet. There's usually a delay because we file the cost report 5 months after year end. Then the MAC has another 60 to 90 days to issue the Icarus file and upload it to CMS, and then it takes a while for it to become available to the public. This particular example, I'll just show and talk about a couple different specific scenarios. This pulled the data and summarized your S10, for example. Let's take a look at your S10, and the first column shows your overall cost of charge ratio that's used in the S10 calculations. S10 may not apply for critical access hospitals, but it still shows you what the overall hospital cost of charge ratio is. And this table will show what the average is for PPS hospitals versus critical access, and then breaks it down by state. It also shows what your total unreimbursed and uncompensated cost is, and can compare you to specific data sets. This is comparing Maine, New Hampshire, and Vermont to the country, where so for example, the PPS New Hampshire average cost charge ratio is 29%, but in Maine it's 42%. Critical access hospital in Maine is 61% average versus New Hampshire 53 and Vermont 51. Just a different tool to use. It could be something where you look at your particular hospital and you look at your number and you compare it to this and say, okay, what are we doing, and how do we compare? Is your average higher? Is it lower? And what's are the factors that play into it? Are there some operational opportunities where you can look at your cost report and potentially increase that ratio? So just kind of raises questions and gives you a perspective to look at your cost report and wonder if is there anything you could do differently to maximize, or is there any risk? Another one is your Medicare bad debt. And sometimes you'll see some questions about your Medicare bad debt, and somebody may say there's an opportunity, and that's information they're getting from your cost report. We could take a look at your Medicare bad debt claims, and we could take a look at your total Medicare deductibles and coinsurance on the cost report also, and then calculate what is the percentage of bad debt to your total Medicare deductible and coinsurance. Well, you compare that to other states and other hospitals, and if your average is 2%, but the other hospitals in the state is 10%, is there an opportunity there? Or perhaps you just have a really great collection effort. You'll see Maine, for example, has a much higher average compared to New Hampshire, Vermont. Main reason for that in this particular case is because Maine has crossover bad debts. New Hampshire, Vermont has very little, if any. Talking about bad debts a little bit more, just real quick. Once again, when you look at a particular hospital compared to the averages, either to the state, country, region, or just peer groups, it could be eye-opening in saying, okay, is there an opportunity in our collection efforts, or are we missing anything? Or if your number is too high, is there risk? Are you claiming some bad debts that maybe you shouldn't be? Those type of questions. This particular slide shows a comparison of Rhc rates. So for hospitals with rural health clinics, this is showing what the calculated cost report cost per visit is for your Rhc. It's showing total Rhc visits, and this is calculated payments, which is a little bit misleading. It's really your cost report costs. It's showing what your Rhc volume and cost per visit is, and compares it to in this particular list, which I believe it's all the hospitals with Rhcs in New England. Anywhere from $388 or $453 per visit to looks like as low as $137 per visit. This one with $137 per visit makes me wonder, what's happening there compared to everybody else who's in the higher 200s to 300 range. Medicare DISH, Deb covered this a little bit. She talked about looking at the data for that and comparing your DISH. Once again, this is just showing for those 83 hospitals in Maine, New Hampshire, Vermont, what the average by state of the empirical DISH is compared to the uncompensated care DISH, and what the DISH percentage on E Part A is. So it's comparing each state. It all ties in together. The UCC DISH ties into the S10 data, but you combine some of this together, and as Deb said, you slice and dice it, and you start looking at it, comparing it to your data. It could be valuable in identifying opportunities. Are you capturing all your Medicaid days, for example? And the last couple slides, this one focuses on worksheet G, shows an example of the data on worksheet G for financial statements. It shows your worksheet total charges, gross patient revenues. What were the COVID funds reported on those? What PRF payments and such. And then what's the net income or loss? And this is once again, it's by state, but very good comparison. In theory, if G is done accurately, the net income should agree to your financials. They should all agree to your financials. And as I said earlier, the worksheet G series was used, by CMS for your PRF payments. This comparison shows at a high level some wage index data. The first column is showing the average hourly wage. This is line 1, so this is your total average hourly wage. They're all pretty close. Looks like New Hampshire's got it slightly lower. Then we're looking at worksheet A expenses. We're looking at salaries and other expenses in total, and comparing salaries to total to get a percentage of total salaries. So it's how much of your salaries is going into the wage index calculations and what the average hourly wage is in total. The next couple slides talks about cost of charge ratios. This is a good one where we're looking at a few specific cost setters. We're looking at OR, radiology, physical therapy, medical supplies, and implants, and we're comparing the cost of charge ratio for each cost setter between the states. It varies quite a bit. You look at the OR, for example, where the Maine average, is 42%, New Hampshire's 36%, and Vermont's 30%. What's driving that? Is it, it could be the size of the hospitals, it could be the location, geographic location, different, how many were critical access versus PPS. I do find it interesting a lot of times to take a step back and think about where are the hospitals located, or is the cost of living higher, or are the charges higher as a result of it? Massachusetts, I think, if you tend to look at Massachusetts cost reports, you tend to see lower cost of charge ratios because I think charges are higher. Compares it to national, the average for critical access is 47%. New Hampshire and Maine were right there. Maine's higher and Vermont's a little bit lower. A couple other specific cost setters, we're showing drugs, ER, and observation, and then we're also comparing the inpatient per diems. What's your D-1 room cost per room for your for those ancillary routine services for med surg and ICU. We're looking at PPS. We'll go to Vermont, 1,800 as an average. Compared to ICU's 3,700. This also comes in handy when you look at the utilization. You look at your Medicare utilization, and you're comparing ICU cost per day of 3,700 as opposed to A&P of 1,800. When you want to make sure when you're filing your cost reports, you're properly matching. And some of the reports Becky touched upon, she has specialty reports. I wanted to add, there's two specific ones in there I really like using a lot, and one of them is the utilization report, Medicare utilization report, which tells you what your Medicare utilization by cost center is. So that comes in very handy when you're trying to model after the fact. You're using the cost report and you're saying, I only have a budget to hire one FTE, but I have two different departments. If one department is paying you, Medicare is paying you 50%, and the other one's paying you 80%, it could help you make a decision and which route you're going to take in making those, which department you're going to hire potentially. The other one I like is the per diem report, the interim rate report. I use it a lot of times to compare it to the CMS interim rate letters. After you file your cost report, 3-4 months later, you're going to get a letter from CMS with interim rates and ratios. Let's face it, they're not always accurate. Sometimes they make errors. They're putting in numbers. They might pick up Medicaid number instead of Medicare. I always go back and compare it to the HFS reports. And if they're not applying a audit effect to it, it should agree or be in the range of what the HFS report is showing us. And that was all we had. A lot of the same stuff, covered previously, but just once again, it's many different uses, and cost report is very valuable after the fact in making a lot of management decisions. And I think Zach sort of covers some of those operational items. Any questions?
Thanks, Dennis. I don't see any questions in the chat, but
Right. Well,
appreciate
thank
you.
you.
Thank you. Thanks for joining on a last minute basis. Definitely appreciate your help.
You're welcome.
Great. Our next speaker is Zach Bozer. Zach is a former hospital leader and is passionate about helping small rural hospitals navigate the sea of change in today's healthcare environment. He's an expert in financial and operational analysis and is drawn to the challenge of improving healthcare delivery for future generations through work with rural providers and communities. At Stroudwater, Zach supports clients through services such as financial and operational analysis, as well as strategic planning and cost report review. Welcome. Appreciate you being here, Zach.
Thank you very much, David. Appreciate the introduction. It's great to be here with you all today. This is my first meeting and first time presenting to this group. So I really welcome the opportunity to be with you today and present. Just going to start sharing my screen here. Okay, looks like it's sharing successfully. So today I want to focus on how to drive operational strategy using completed and already filed cost report data. And I want to put a rural focus on that. As David had mentioned, my background is rural healthcare, specifically in critical access hospitals, but I also do work with a lot of rural community PPS hospitals as well. I will say that the majority of the work that I'll be covering today is most applicable to critical access hospitals. But I think, it'll be generally beneficial overall. There's certainly some other opportunities and things that, system parents can look at, and, other PPS hospitals as well. I think really the theme for today has been that the cost report provides such an incredible amount of data, and it's being able to look at that data and then, peruse it and slice it and dice it, as I believe Deb said, and to make meaningful connections and find trends and that kind of thing. So today, I'll provide like a quick overview that I probably will barely touch on, since many of you are already very familiar with the cost report. But then I'll get into some of the hospital operations and things that I look at on the cost report when reviewing that with clients. And then at the end, I'll accept any questions that anybody has. So, the cost report has an incredible amount of data, as we've discussed. We like to think about this at Stroudwater kind of as, the tax return for the hospital with Medicare, particularly with critical access hospitals. You get to the end of the year, you submit all of your revenues and all of your expenses, and then, we find out, are we going to owe money back to Medicare, or are we going to get money, from Medicare? And, specifically for these terms, and a lot of the previous speakers have looked at aggregating data across different states or, types of hospitals, where my presentation will focus a little bit more on the specifics of a single cost report. So if I'm working with a client and reviewing their cost report, what are some of the things that I see that operationally we can, understand and look at, and maybe look for different ways to improve on the cost report itself? Certainly there are a lot of different tips and tricks and, allocation methodology things that we can do specific to the cost report. But at least for this session, looking at, the cost report, as a lens of the operations of the hospital, what are some of the things that we can understand and then use for, financial and operational improvement? So as I mentioned, a lot of this will be specific to critical access hospitals, and, the lever that they have is that cost-based reimbursement for inpatient and outpatient services for Medicare. Some states do provide cost-based payment for Medicaid, and, maybe not 100%. I know Maine is higher. Other states don't participate at all or use some kind of peg benchmark, but the power of cost-based reimbursement for a CA is incredibly powerful. So in this section, I'll get into some of the specific things that we look at. First is related to capital investment. And again, as I was mentioning, that cost-based reimbursement is incredibly powerful, particularly in things such as capital initiatives that aren't really available for a PPS hospital, or if the critical access hospital were reimbursed under the PPS methodology, capital improvements that maybe they wouldn't be able to take on. So as an example, if a CA is using, looking to do a major capital replacement, facility, maybe acquire some equipment, that the amounts that they will incur in depreciation and interest are then reimbursable from cost-based payers. So using the example that, if a hospital is looking to purchase, say, $1 million piece of equipment, and the CA is 50% cost-based, that they will then receive additional reimbursement in the amount of $500,000 for that specific year for those capital initiatives. And that will continue as well throughout the duration of the useful life of that capital, whether renovation or the equipment itself. And so that allows, hospital leaders at a critical access hospital to kind of take a different look at what's actually feasible in terms of capital initiatives. Maybe if we're looking, we need $1 million, renovation in our ER. Well, we can't afford $1 million, but, wait, we have this, cost-based reimbursement mechanism that is going to allow us to get a significant piece of that back on our cost report. And that actually makes the price tag much lower, and it makes the, the feasibility of that capital project actually feasible. Another thing that I look at on cost reports and, is available is the home office cost allocation. So specifically for critical access hospitals that are in a system relationship, they want to work with their parent organization to make sure that they're able to receive home office cost allocations from the home office. This is, again, another cost-based reimbursement mechanism opportunity that the parent system is able to transfer certain administrative and support service costs to the critical access hospital that is then able to be leveraged by the CA through cost-based reimbursement to increase the reimbursement that they receive through the hospital on their cost report. And so this has the benefits of being able to shift cost from the parent organization, and it also incentivizes parent organizations to work with critical access hospitals, include them in their system and maintain healthcare in rural communities and continue to invest there. A lot of rural communities, the hospital is the largest employer, and it's one of those organizations that without the local hospital, that the town itself, would have a tough time continuing to exist. And so by leveraging this home office cost allocation, it allows an opportunity to continue to grow and improve within rural communities. And so I've included a worksheet A81, just a little snippet. And this is an example of a home office cost allocation on the cost report. Specifically, one of the things I look at is, what types of allocations are being made. So we see we have some capital costs, some G&A as well. And I look for certain amounts, or at least to be above a certain amount of around $500,000 to $1 million, such that the critical access hospital is then at least receiving a significant amount of cost from the parent organization. And it lets me know that they're integrated within the system to an appropriate extent as I see them getting some of this allocation. Another thing too, and it's not, I'd say this maybe isn't best practice of what I look at, is that we have these kind of lump sum A and G amounts of, significant multi-millions that, at least for a critical access hospital, oftentimes the ability to go through here and actually, separate these out by specific cost centers will actually lead to greater reimbursement. So that's something also to keep in mind as you're preparing the schedule, is to the extent possible that we can get more detailed, oftentimes that will lead to greater reimbursement. The next is looking at a swing bed program. So for those unfamiliar, a swing bed program is a short-term rehab or post-acute care at a critical access hospital and rural acute care hospitals. And it allows the hospital to deliver additional inpatient rehab and skilled nursing services. And this is an important reimbursement opportunity for critical access hospitals specifically. But one of the things that I look at when I'm reviewing a cost report is this line 5 and line 6, the swing bed SNF and NF days. And we see the total patient column here. We have about 400 patient days. One of the benchmarks, or rule of thumbs, that we use at Stroudwater is an average daily census in swing bed for total swing bed patients of 4 per 10,000 population in the hospital's primary service area. So when I'm looking at a cost report and I see, 400-ish days and average daily census a little bit above 1, that makes me want to have a conversation with the CEO or CFO and kind of understand, what we're doing or maybe what we're not doing to grow our swing bed program. Maybe the importance of the program isn't well known. It's not a strategic priority within the organization. Maybe we don't have someone kind of leading the charge to, working with other PPS hospitals, looking for swing bed referrals. So it's often a good conversation starter to kind of understand what we're doing or not doing. And then we can work as kind of like a next step to understand how do we actually go about growing our swing bed program. So I've included an example here kind of showing 2 scenarios. We have kind of like this base case here where we built out the pertinent information using cost report data from that hospital's cost report. And then one of the other things that I often will like to do using the cost report is some what if analysis. And so using that previous example about an average daily census of 1 for swing bed, and built this all out for, the acute observation and such. We have, our costs here, our fixed cost, our variable cost to get total cost. We have cost per day as a result of that. And then down in the bottom corner, we see what our inpatient overall margin is. and it's about minus 400,000 for our inpatient. Whoops. But what if we were to increase, do some operational improvements, make this program a priority, and increase our swing bed census from 1 to 3? What does that do to the profitability of our inpatient unit? Well, it's a huge increase of about $382,000. And so when I go through this exercise with a lot of hospitals, and particularly with some of the finance-focused people, this is the type of work that being able to show the financial benefit of a successful swing bed program, to then be able to work with the CFOs to then get resources to some of their clinical leaders to actually build up their swing bed program. Kind of continuing, I guess, on the swing bed train is related to non-Medicare or Medicare swing bed days. And so this is a little bit different, sometimes different service for swing bed patients, but it's looking for an opportunity to work with organizations to also accept non-Medicare, Medicare swing bed referrals. So one of the common misconception among critical access hospitals is that if their cost-based rate for swing bed is, say, $1,200 a day, that if they were to accept maybe commercial swing bed patients at $500 a day, then they know that their costs are $1,200 a day. Hey, Zach, aren't I losing $700 a day? Well, the way that this works on the cost report and the way that these costs are carved out, that's not the case. So there's this statewide Medicaid NF carve-out rate, which is generally around $200. And so any contract that you have with payers that exceeds that $200 or whatever the NF carve-out rate is will turn a profit for the critical access hospital from these NF patients. And so this is an important opportunity to work with facilities. And I know off the top of my head, the University of Kentucky does a really good job with having critical access hospitals within its system and putting together contracts for daily stipends to discharge acute patients ready for post-acute care that otherwise they'd have to hold on to for a couple extra days, incurring costs and all of that, where they've created this stipend above the NF carve-out rate for their cause, to where there's a significant margin, appropriate margin for them, make it worthwhile for the CA, and that they have this constant flow of these non-Medicare, Medicare Advantage patients going to their cause within their system. I've also included an example here where on worksheet S3, if you were to include NF carve-out or NF swing bed days on your Medicare line, what that effect is. And so essentially, from looking at the current, we see in the middle these total days are 4710. And upon review, what we found out is we were actually including 107 days that were swing bed NF within our Medicare line. And what happens is by doing that, we're diluting, kind of artificially, our cost-based rates for a critical access hospital. And by reviewing that and either resubmitting or making sure in future cost reporting years that we're including those days on line 6 instead of line 5 on the worksheet S3 part 1, that we're actually going to see an improvement on from reimbursement, because we're not spreading our costs over in overinflated number of days in the denominator. Another operational opportunity that I'll look at with hospitals, and this doesn't necessarily need to be specific for cause, but it's looking on worksheet A at non-reimbursable cost centers. And so that's what we have a little graphic of here. So there's a couple things. So for critical access hospitals, these are non-allowable cost centers from Medicare, and we're not going to be reimbursed cost-based on these cost centers. So that's one. And what we like to do is make sure that we don't have any, say, like unoccupied or shell space, that we can repurpose that into some other cost center and use that space more efficiently to include within a department which receives cost-based reimbursement. We also want to look at say designation changes for clinics. So if we have freestanding clinics, we can look at provider-based clinics or rural health clinics to see if there's an opportunity there to get those from a non-reimbursable cost center to a reimbursable cost center. And particularly by doing that, it's what I like to call kind of the triple whammy for a critical access hospital, is that you don't have overhead being allocated to a non-reimbursable cost center clinic. You get a reimbursement pickup, most likely from either a rural health clinic or a provider-based clinic. And then you also have that clinic become eligible for 340B. And so what I'll do is I'll look at, and I've highlighted a couple departments here of clinic departments, and I'll look at significant costs kind of down below the line here in these non-reimbursable cost centers, and then look for opportunities to then redesignate those as provider-based clinics or rural health clinics. And this goes for PPS hospitals as well, particularly provider-based or rural health clinics. There'll be likely an increase in your actual patient revenue reimbursement. But then if the hospital also, if you're eligible for 340B, you're able to participate in the 340B program rather than as a freestanding clinic, it would be ineligible. Another thing I'll look at on the cost report is if the hospital does have rural health clinics, I'll find out if they're consolidating those clinics on their cost report. Now, there was a change in reimbursement methodology that took effect at the beginning of 2021. And so rural health clinics that were established prior to that date are able to be consolidated, and rural health clinics that have been established following that date may be consolidated, but you can't consolidate a grandfathered cost reimbursed previously rural health clinic with a rural health clinic that is reimbursed under the new upper payment limit methodology. But essentially what we're showing here is an example of a hospital that has 7 rural health clinics. And we see this combined total column looking at the visits, 55,525. Now, what we're assuming here is that some of these rural health clinics do not meet the minimum visit threshold in their rural health clinics, meaning that their reimbursement is reduced to some degree. Well, when you consolidate your rural health clinics on your cost report, excess visits from some of these other clinics will make up for shortfalls among the clinics that fell below that minimum visit threshold. And you see that the visit total actually goes down in this case. And that's a good thing, because you're either using the actual visits or the minimum visit threshold if you fall below that. So we see the visits going down here. And for purposes of this example, we're looking at the actual allowable cost divided by a smaller number of visits, which is going to lead to an increase in reimbursement in this example. So rural health clinic consolidation, definitely a great idea. It's something that I'm always looking for on the cost report. And then lastly, we'll use the cost report to do some service line profitability analysis. So we have an example here over on the right where we do a profitability analysis for a skilled nursing facility. So we get the revenue, we pull most of this data from the cost report. Some of it we'll ask the hospitals for specifically, maybe like their self-pay rate and things like that in order to get the revenue. We'll look at what their direct expenses are. We'll pull those off of worksheet A. We'll get any ancillary expenses off of the D-3 for a PPS SNF. And then all of the overhead cost that gets allocated as well to get us, the fully allocated cost and true profitability of, in this example, the skilled nursing facility. And we see that it's, losing roughly $1.7 million on fully allocated costs. And so this allows us to use the cost report to understand the cost that we're allocating to our different departments via overhead, but also looking at this as kind of like a check and balance to say, hey, does it actually make sense that we're allocating this much cost for admin in general, or this much cost for dietary? And so maybe there's some allocation changes that, statistically, that we'll need to change on our cost report in order to make things more in line if something sticks out as kind of grossly, out of line here. And then we also do a contribution margin analysis as well. So it's kind of accounting for the total fully allocated costs versus variable costs. And again, these are some of the things that we just kind of have used for what percentage of these costs are variable versus not variable. So different departments have different percentages of variable cost, but it kind of shows from a contribution margin basis that the skilled nursing facility is actually contributing positive margin to the hospital. So if we only looked at this, we see, hey, this service is a loser. Maybe we should cut the service. But overall, it actually is contributing margin to the overall organization. And then additionally, we also look at this, this was on a critical access hospital. So we also look at the cost-based effects here and say, all right, if there's $3 million of expense, kind of being allocated away from the hospital, and we're 37% cost-based in this example, that there is this effect of $1.1 million of profitability that, cost that would be cost reimbursed if this service were to go away. So our true profitability in this example is really $216,000. Again, it is a positive margin, and it would allow management to say, hey, this is a service that, it's not overly profitable, but it is providing an important, need and service within our communities. And it's something that we should keep versus looking solely at this fully allocated costs and saying, hey, maybe this is something we should think about eliminating. And all this data is pulled from the cost report. And so if there's any questions, I'd be happy to answer those at this time. But I hope I tried to pack as much information in there as I could, but I hope that this was valuable and kind of a unique way of looking at the cost report to help with operations at your hospital, and maybe, planted some seeds for some ideas to go back to the drawing board and look at your cost report for your hospital. So thank you again for having me today.
Thanks, Zach. I appreciate you participating today, and appreciate all the information you have to share with us. It's definitely insightful. So we have about 20 minutes left, and for the last 20 minutes, we can transition to our panel discussion. As part of the panel discussion, we have two individuals who represent health systems in Maine. Bill Ford is an Associate Vice President of Reimbursement at Northern Light Health. Bill has 20 years of healthcare experience and 18 years in reimbursement. At Northern Light, Bill's experience in reimbursement and cost reporting for a 10-hospital system, including hospitals with IME, GME, DISH, rural demonstration projects, Medicare dependent hospitals, psych, PPS, and critical access. I think that's probably all the possible categories there could be. Also joining us is Skip Morgan from Maine Health. Skip is the Vice President of Integrated Reimbursement for Maine Health. It's a health system including an academic medical center, a psych hospital, 2 urban community hospitals, 2 sole community hospitals, 4 critical access hospitals, and 7 nursing homes, as well as 2 home health hospices and an HLA transport testing laboratory. He's worked in healthcare reimbursement for 25 years, during which time he's worked with hundreds of providers in over 20 states in his capacity as a reimbursement consultant. So we have a handful of questions. Basically, I think the idea was, we saw some great presentations, some really interesting concepts, and I thought what we could do is draw on the expertise of Bill and Skip to just talk a little bit about, what is practical from their perspective in terms of cost report analysis. And, both Bill and Skip do represent a broad variety of different reimbursement mechanisms. So I think they really speak to examples from probably most members of the audience today. I think there's probably good representation between the two of them with regards to just about every reimbursement mechanism out there. With that said, feel free to ask any questions. A handful of questions that we have just to sort of start the discussion. Just in general, in both of your organizations, who do you typically share cost report data with? And what do you see in terms of the value that the cost report provides to the end users internally? And looks like Billy, you're off mic or you're on mic, so I'll go ahead and let you start.
All right. Thanks for having me. Yeah, so it's a great question. We share various parts of the cost report with several different departments. Um, in a lot of cases, it might not be in the form of actual cost report work papers or worksheets. It's more analytics that go along with the subject matter. But there are several departments where we have to share specific items from the cost report work papers. Those being the 340B program, that for our 340B hospitals, in order to continue participation in the program, certain worksheets are needed. When new departments are added to the hospital, new locations are added to a specific hospital that has 340B reimbursement, we have to have them added as either provider-based clinics or departments of the qualifying hospital. So that's a specific example of using the cost report for that. I think the question really is sharing the cost reports with departments to help them maybe manage cost structure, or to let them know at a departmental level maybe where they might be seeing year-over-year variances or changes in operations are having a trickle-down effect to their cost reimbursement. And in those instances, we actually have a cost accounting system right now that we're building for Northern Light Health. And what we feed that cost accounting model is the cost report information. And so indirectly, we're sharing that cost report information with all departments of all member hospitals. As we embed different net revenue results within the cost accounting mechanism. So, and then there are specific member hospitals that require us to provide them with information from the cost report to do individual analysis that they have historically done in the past, and using the cost report specifically to help them with that. So, it's not an easy one size fits all answer, but we distribute the cost report results to basically all, in one shape or another, all hospital departments at many different levels.
Okay, thanks. Skip, what about from your perspective?
Sure. We tend to only share the full cost reports with corporate management, our ACO, and then the individual cost reports with local health system executives. We go through it in detail at those levels. Really, on the clinical side and on the departmental level, the RHCs obviously are very interested in their rates, and so they get a little bit more information than most of the standard departments across the system. But we share data as needed, for decision-making purposes with the clinical leadership to see, if there's changes in structure that may be needed, or if there's cost reporting information that may lead us in the direction of questioning, how productive or if there's significant changes in the area that we need to question.
Great. What about the tools? Are you essentially drawing the data straight from the cost report, or do you use any of the Icarus tools or the public data files at all? Or?
Well, at present, we really don't. We do use the HFS management tools a little bit, or at least I should say I do when I'm reviewing the cost reports. I have my favorites because there's a ton of them. So I have my little data set. We use a lot of Excel-based tools. We are converting to a work paper product that will allow us more flexibility in pulling, detailed work paper information that goes into the cost report, and compare that year to year. So we are looking forward to having more capabilities along those lines in the future. We haven't gotten to the point where we're accessing HICRIS database information yet.
I can echo that statement. We use a lot of information from the cost reports, but we have previously determined templates from historical review that we feed more often than not, the net revenue models that we run on a monthly basis. That those we use information to assist with those. I think some of the tools that we do work with outside consultants regarding some of the cost report results, and actually in assistance with prep and review of our cost reports. And those consultants do use a lot of the HICRIS tables, a lot of that data. So we're actually fed a lot of that. So for our system at this point, we kind of have that hybrid approach where we've done a lot historically. We're in the cost report work papers because we prepare most of our cost reports or assist in the preparation of them. So we know what information we want to gather and pull from there. Not to say that the reporting couldn't be used, but as we're going through them, we're just familiar, and would love to embrace more reporting. But at this point, with various software items that we are using for a couple of our hospitals, those also have built-in mechanics for analysis. So it's a big hybrid approach. There's a lot of information.
Great. So there's a question in the chat, and I think it ties in with a question that was already sort of in the queue with regards to reimbursement opportunities and what types of reimbursement opportunities might be out there, looking forward into the future. A question from Valerie Barber: what are your opinions of going to cost-based, in particular with regards to an RHC versus a PPS, I believe is the question, and which would be more profitable and protected? I believe that's correct, Valerie. If I've got that wrong, please let me know.
So my first thought on that is yes, cost reimbursement is, especially these days, it's great protection for the hospital with the increasing costs, and that's outweighing the increasing revenue opportunities I think that are available in the industry. That specific question about RHC. RHCs, any new RHCs created here going forward are on the fixed fee, non-grandfathered, non-cost reimbursed schedule now. But if you're fortunate enough to have cost-based RHCs that were grandfathered in prior to 2021, I believe, then yes, so what we've seen is that cost per visit, and with the new RHC regs, the cost per visit has been the best benefit when it comes to family practice and primary care settings. It's definitely outweighing any sort of fee schedule increases year over year in provider-based clinic settings. So I guess just to make sure I was clear on that question, because I'm reading it, going to cost-based RHC versus DISH, I was wondering if that was, more like a demo project versus a PPS, cost-based reimbursement for the inpatient, or if that truly is RHC. But
yeah, I think, it's a good point. I mean, I guess you could interpret it a couple of different ways. I think, and Skip, feel free to weigh in as well. I think you could look at that question, and it's probably worth asking, what's, from a hospital's perspective, what would be preferable? I have my own opinion, but I'll let you guys answer whether cost-based or, yeah.
Right. I would say it's very much a specific setting, specific answer issue. If you really are talking about a very small rural hospital that could convert, because RHCs can have beds capacity, you know, it really depends on the historic, perspective. Have you gotten cost reimbursed previously? Are you limited to the by the new uh, caps? And are you limited in the short term by the new caps, because they will be growing significantly over the next few years? So if you have enough volume, you may actually have costs. If it's really primary care practice, you may have costs that will drift below those caps in the next few years. But generally, it's hard to say that a new RHC would be better than a PPS hospital in my mind, especially considering that Maine, the way that Maine hospitals are cost reimbursed for Medicaid. The RHC really gets an inflation factor of barely any inflation factor, I would say, where um, PPS hospitals would be, the physician side would at least keep up with cost, and you'd get that in full as a rural provider. Hope I didn't go down too many tangents there.
No, I think that's fine.
Yeah,
Are there
and I
any
was just gonna
that,
say two on that, David. As far as the protection, um, these are ever evolving. All of these rural opportunities, Maine has been protected, I think, because we have pretty strong representation. But they are always a source of target. Any specific reimbursement that is above and beyond maybe what a national average would be for certain services, there is always some risk there of a one size fits all system going into play. So we've always kind of maintained that while it's available, take advantage. But it's like Skip said, it's situation by situation. But nothing is protected forever. I don't think.
Right.
um, I've got a Zach. Zach, would you like to comment on that?
Sure, David. Certainly in our experience, the cost-based reimbursed RHC seems to be the way to go. Certainly, the upper payment limit creates certain constraints on a go-forward basis. But I think as Bill had already mentioned, that as that continues, that upper payment limit continues to increase by $13 per visit over the next several years through 2028. I think it will start to marry up with kind of cost-based reimbursed. But one of the other things too that it doesn't account for with the upper payment limit is, as you're continuing to grow your RHC and maybe get a little fancy and incorporate some specialists from time to time in there, that the cost-based mechanism certainly helps that out. It kind of helps kind of raise all boats, so to speak, where the upper payment limit, you're almost sort of disincentivized to do that because you would be cutting into your margin, so to speak. So I think, and I know that, there's legislation kind of looking at, the cost-based piece again. I don't know if, I certainly have no idea more than anybody else of what it would change or go back to in the future. But I think there's certain, detrimental effects of the upper payment limit for current cost-based reimbursed clinics. But, certainly coming in now underneath the upper payment limit for rural health clinics, it's, it's a good opportunity either way. Anytime you're able to significantly outpace inflation in reimbursement growth, whether via the upper payment limit, you're getting double digit reimbursement growth for that first few years and then high single digits through 2028 versus, the physician fee schedule at 1 to 2%. That's always, certainly a really good thing. But I think someone had mentioned earlier too, it's a little situational on volume as well. So if you have a super busy rural health clinic, that the cost base could have a detrimental effect to some degree, where the upper payment limit would be helpful and kind of acts more like a provider-based clinic to some extent.
All right, great. Well, I think we're just about out of time. This has been a great discussion, and I really appreciate Skip and Bill your participation along with our other speakers. It's been really informative. Thanks to everyone for imparting your wisdom and experience. And thanks to everybody on the line for joining us today. We appreciate your participation. Everyone will receive an evaluation following this, and we encourage your feedback. So thanks again, and have a great afternoon.
Thanks, David.
Thank
Take
you.
care.